Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the medium time frame bullish scenario where we're looking at a finished three-wave structure for now new highs to come. In this particular scenario, we're looking for a zigzag in A, flat in B, and a five-wave structure in wave C to create a regular flat, which is less common, and the most common target for a wave C is in between the 1 and the 1.236, taken from the high to the low of A to the high of wave B, which as you can see has been nicely respected. Now in this scenario, the problem is this wave B over here, as wave B by itself is a flat structure, and a flat in a wave B in a bigger flat pattern is extremely rare, lowering the probabilities that this over here is a finished flat structure. However, if we are looking at the bullish scenario where this is then the low and we look for new highs to come, we have to count this move to the upside impulsively in one way or another. And I have two scenarios to show you. So in this scenario, we have an expanding leading diagonal, which is extremely rare. Anything expanding in Elliott waves is rare. The expanding triangles, expanding diagonals, very, very rare indeed. Where here you have a five-wave structure that we're looking for, where wave 3 has to be longer than 1 and wave 5 has to be longer than 3. Therefore, the minimum target is hitting the 1-to-1, sitting at 29.1k. And usually the 1.618 is like a maximum target at like 30.8k. In this scenario, the 0.5 acted as support for wave 2, which is a less common target for a wave 2 in an expanding diagonal, and the 786, a common target for a wave 4 in an expanding diagonal, has been hit, has so far been acting as support, but the 886 is also still a target, sitting at 26.3k, and the invalidation is if price moves below the low of wave 2, as you don't like to see it. Now, an alternative scenario, which is really early to call, but Mas2 came with it in the Discord group, which I think is great. It's forward thinking. He's looking for a three-wave structure potentially then in wave 1, as it is so early to call. Then a zigzag structure in a wave 2. Golden pocket is a common target for a wave 2 in a leading diagonal. So that could be a nice area of interest. Besides, by the way, we also have additional support inside the golden pocket, this blue box here between 26.2k and 26.3k. So that's very nice indeed. And then you'd be looking for a wave 3 to the upside. Most common target for a wave 3 in a contracting leading diagonal is between the 786 and the 886, taken from the low to the high of 1 to the low of wave 2, which is then engulfing the blue box over here, which is very nice, 29.1k to 29.4k. Then you expect a three-wave zigzag family structure in wave 4, before then eventually a wave 5 to the upside. Now, if we do get a move towards the upside, price is not allowed over here to hit the 1-to-1, as a wave 3 in a contracting diagonal is not allowed to be longer than wave 1. So the invalidation 29.8k. If we then zoom in over here and look for bullish scenarios on the 1 hour, then we are looking for three-wave corrective patterns, because if this is a corrective structure instead of an impulsive structure, then we expect new highs to come locally and at least take the 28.6k high. There's two scenarios over here. We have the ABC, which is a 5, 3, and then a 5-wave move to the downside, or the WXY, which means all of the waves are three-wave structures, but then we're talking about a potential double zigzag, and over here a zigzag ABC, correction ABC. It does have to say that this wave Y for a double zigzag is quite a lot longer in time and length than W over here, so that's not too nice. So, you know, the ABC is at least more pretty, I suppose. And the most common target area for a wave C is between the 1 and the 1.236, taken from the high to the low of A to the high of wave B, which as you can see has been very nicely respected. Now, a wave C can end on higher volume, especially on the lower time frames like 50-minute and stuff. You can see moves where a wave C in the zigzag structure has very high volume in the top. So over here, you can see that in the low, you actually have the highest amount of volume. Price moving down, volume moving up. But in a wave 3, and we'll get there in a second, you actually like to see continuation. And look how long we've gone sideways now, much longer than the ranges here, for example, and it gives you an indication, of course, of how impulsive the move to the downside actually is. So this increases probabilities for a bounce as well. Also, we are currently bouncing on top of the point of control of this range over here, which is quite interesting. I don't know if I have it here in my, yeah, so there it is. Point of control acting as support over here, always interesting. Now retesting over here the value area high of this volume profile. If we get rejected over here, then the value area low becomes a very interesting target at 26.1k. So this is a very important support resistance level at about 27k. Now, if we then zoom out and we go to the bearish scenario, then over here we are looking for a 535 ABC to the downside, a 535 zigzag. Most common target for wave C at the moment is between 22.1k and 20.5k. But what is also important here, not necessarily Elliott Wave related, is first of all we have a double bottom. Now double bottoms and double tops are like a magnet for price, right? So this is very important, but also Bybit over here already wicked this low. And if I go to the Bybit chart, I like to show you something which usually I only do in live streams, but at least I want to show it. So over here you can see the wick on the Bybit chart, wicking this low, which automatically increases probabilities that other charts will eventually also take this low before anything crazy up or down happens. But I just want to show you that what you see here and then filling this wick is actually really common. So if we zoom out and we just simply start looking for a couple of these wicks, then over here you can see as well, we got a wick, three-wave move, and then eventually again a move to the downside. And this is happening over and over. You can go back in time, a wick, three-wave structure, again a move towards the downside. So here another one, wick, three-wave structure to the downside. And this is stuff that you can build statistics on, of course. So big wick, three-wave structure, move to the downside, this low is lower than that one. So one can of course build statistics about this and create a potential trading strategy or probabilities around it. But it's just that the fact that Bybit did take that low automatically now increases that other charts will follow, as price most commonly, at least based on statistics, would fill the wick to the downside and therefore take this low, which means other charts will follow as well. So this is just something to keep in mind, and you gotta love statistics because it helps in trading as well with expectations, even for Elliott Waves. So if we then zoom in to the more local structure over here, then of course we are looking for corrective structures in this scenario, as we are looking for an A, B, C, and B is a three-wave structure. So we are looking here for either an ABC that is finished. After an ABC, you want to see continuation in an impulsive structure, and then a 1, 2, 3, 4, 5, right? Looking for a downside. Another option over here, and by the way, wave C ended in the most common target area of a wave C, which is also nice. And another option is a WXY, flat in WX, and then a zigzag in wave Y. Usually wave Y and wave W have around a 1-to-1 to a 1.618 time relationship. We just crossed the 1-to-1 here on Friday. The 1.618 is sitting on Tuesday, the 24th of October. So that would be like a little bit of like a maximum date, that if we go up once more and then potentially for a zigzag here, then preferably the high is made before that yellow line. But of course we wait and see patiently what happens. But at least after a three-wave corrective structure, you're looking for downside. And also because the bullish scenario as well, one is an expanding structure, which is very rare, and the other one is the contracting diagonal, but it's way too early to call. The bearish scenarios gain in probability as well. Now, if we look for the bearish scenarios more locally, so we had the ABC for then a potential bounce to the upside, but of course the other way around, an ABC, the wave C, can also be a potential wave 3. It all depends on what we now see here, really. So in this scenario, we're looking for a 5-wave structure for much lower prices. Wave 3 is not the shortest. It is longer than wave 1 over here. As you can see, it passed the 1-to-1 of this wave 1, which is very important. And also here, price moving to the downside and then creates higher volume. Now, preferably a wave 3 hits at least a 1.618, is extended, which is at 25.9k, which is not the case over here. And if we are in a bigger wave 4, because the longer price ranges here, right, the more bullish it becomes, basically saying we do expect price to potentially move to the upside a little bit more, if not just take the high. But it really depends on what is forming here, and it's a bit early to call what is really happening in this range. But if price moves towards the upside and hits the 382, it also means it's going to hit this low over here. And in a impulsive structure, right, a nice move to the downside, the low of 1 and the high of 4 are not allowed to touch. So over here, if price touches this level, this scenario becomes less probable. Potentially you can move this to the left over here and move one higher. But yeah, you know, it lowers probabilities in general. So this is something we have to keep in mind. For a wave 4 though, common target 236, 382, 05, currently over here resistance at the 382. And you want to see impulsive continuation to the downside. Price moving down, volume moving up. That is typical for wave 3, but this wave 3 is not as impulsive as we saw over here or as we saw over here, right? That is actually what we're looking for. That's not really what we got, but we can't yet scrap this scenario because there are still probabilities that we are here in a bigger wave 4. So 3 is in, ranging in a bigger 4 for then a 5 to the downside, and after 5 is then in, we expect a 3-wave correction before continuation. If we now zoom in more locally and have a little look at this range, also here of course a bearish and a bullish scenario. We go into probabilities in a second, but we had a move to the upside, move to the downside, hitting the 886. Hitting the 886, more common for a B or a wave X, not common for a wave 2. So any bounce to the upside here is likely a wave Y or a wave C, where you then expect the lows over here to be taken. Also a double bottom, by the way, very nice indeed. Support below that double bottom is over here between 26.7, 26.3k, and we know that that is also the golden pocket area, which is very nice, very attractive. Also based on statistics, if you hover right above a golden pocket level, probabilities are also high to touch at least the golden pocket. So 26.2 is very, very important over here. The 886 gives probabilities to taking the double bottom, and over here, if we're looking for a 3-wave structure taken from the low to the high to the low, the target area that we've been talking about has been hit. Daily naked point of control, the gap over here has been filled. Very nice, very impulsive with the news event last night as well. So quite interesting. The thing is that the move to the downside here, so if this is a finished structure, you now want to see impulsive moves to the downside, right? Preferably just a normal impulse 1, 2, 3, 4, 5. But this move to the downside looks very much like a 3-wave structure. If we go to the 3-minute, you can see down, up, down. Very much a 3-wave structure and not a 5-wave impulsive move. So if we look at this being a 3-wave structure and potentially a zigzag ABC, then the only option that we kind of have is going to be a diagonal, but at the moment doesn't look too great. It definitely needs more time. And in the weekend tends to range as well. Now then we have the bullish scenario here. This is then your 1 WXY in wave 2. You're looking for a wave 3, but starting a wave 3 in the weekend is not really high probabilities because the weekend tends to be ranging, and usually you see wave 3s during the week when the markets are open. So yeah, this is your second wave 1, and then a 1, 2, 1. I don't know if this is then 2, right? Or a WXY, a little bit of a longer wave 2 as well. And then you expect a wave 3 next week. So I think it's important that if the markets open next week, we got to see what happens when the market opens. Do we see bullish CVD building or a more bearish CVD building? And it can give us an indication of the direction price wants to go. This wave 1 over here, quite interestingly, is an expanding structure in this particular scenario, of course, which is not really what you want to see. And the WXY in wave 2 is extremely long. So this wave 2 is very long, giving higher probabilities that this is a corrective wave B or X because it is so long compared to wave 1. And again, that 886 has been hit, which is not very likely for a wave 2. But we cannot throw away this scenario yet. And it will be very important to see what the markets do when they open next week. We do have divergences. CVD divergences, bullish one over here, bullish CVD divergences where the target is up here, but the more local CVD divergences will always have priority locally from this high to this high here, lower high on price, higher high on the CVD, bearish CVD divergence, target is the double bottom. It will be invalidated if price can take this high over here, sitting at 27.3k. And also very, very locally, we have this bearish CVD divergence, but I don't really like it too much because of the very sharp and news-heavy nature over here of what happened like last night. So yeah, I prefer to wait and see what happens more locally, which also, if we go to the probabilities, it's basically what I've written down at the micro. But on the probabilities on the medium time frame are still higher for a move to the downside, filling that wick, taking the double bottom on the low time frame. Therefore, we're also higher probabilities of moving to the downside. Doesn't have to be directly. We can still get a move to 29K before a move down. But on the micro, very, very, very locally here, it's a waiting game. We need some more information, see what happens, see what the markets want to do next week, and take it from there. Now, this will be the last update today because I'll be with friends and my fiance tonight. So the next update will be 7 a.m. Central European time tomorrow morning. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use, in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye-bye.